The FOMC is now officially out of the way. Pretty much a nothingburg coming out exactly as expected, which was no changes to the interest rates. But the question is there enough of a catalyst to get the bull's ball rolling once again? Because right now, it looks like they are starting to run out of steam, and you're seeing it in the charts as a lot of the things are starting to pull back. If you look at the hourly, we're seeing it right now, right? The slow bleed and liquidity being drained from the markets. I'll give you one bit of hopium, which you're looking for. I know a lot of you are still on the bullish side over there. We're constantly running the polls to see, where the majority of the market is in terms of sentiment. Now, we know that the market still has a little bit of greed in it, despite where prices currently are. But is there going to be any sort of a liquidity injection? One of the things that I saw came out yesterday, which could drive prices higher, was USDT printed a massive amount of new tether. And usually when we've seen that, we've seen prices move towards the upside, but we're still seeing this drain of liquidity and absolutely very, very, very low volume. And when that happens, it's oftentimes a warning sign that it's very difficult for the bulls to maintain momentum and keep prices up, which means your best case scenario is really a consolidation. I'll show you the trading range that you're going to be looking at, and we'll talk a little bit about the Elliott wave count once again, where we said that possibly putting in the bottom of the wave 2, which would essentially be what the calm before the next big move, right? Is this just the calm before the, call it the upside storm, or are we going to be going into a downside storm? That's what we need to look at. Go and vote in the poll section over here. Are you up or down on your current trading portfolio for this year? Let's see over here what most have voted. So you can see a lot of people down, I'm sure, being heavily wrecked specifically on altcoins and holding altcoin portfolios. So you can answer that question whether you're holding a actual portfolio of coins. If you are, I would imagine then you're going to be down, or is this just your trading account? So kind of a twofold question over there. So we have a lot to look at. I do apologize, by the way, for being a little bit late. I had to reset everything. The technology was not talking to each other over here. Cameras weren't working, then sound wasn't working. I had to reset the entire show. So I do apologize for that. All right, Juneteenth is the day, right? It's Juneteenth, which means stock markets are going to be closed today. So we'll see what happens tomorrow. That means today could trade a little bit like a weekend. But if you look at the close yesterday, it's still in that high-low territory. If you're looking at the stock market on the very, very low time frames, let me just quickly see how this range lines up. So in terms of the 50% level, are we above or below? Caught pretty much right at that 50% level. You do want to see this uptrend maintained on the 4-hour time frame for the stock market, which means tomorrow when the markets do reopen again, maybe you'll see something like that, and that's probably going to bring more liquidity. So that means for the crypto markets, if they don't have any direction to look into for what the stock market is doing, volume will be even lower today. It's going to be a choppy environment expected. No fireworks, no major action within the market, at least in my personal opinion. But stock market is still caught within 2% of creating new all-time highs. So that's your one bit of bullish hopium, is that you could still see this short squeeze as soon as it trades above that 6,160 mark for the S&P 500. Now, the two markets that are doing very, very, very well is the metals market, right? It's going to be gold and silver. Silver breaking out into 13-year highs. And usually when you leave a trading range that's held for such a long period of time, you can expect that that could go parabolic. So one quick tip for those of you that voted over here that you're down, or maybe you're just trading the wrong asset classes. Maybe you just need to jump into an easy uptrend in something like gold or silver. Gold's obviously moved aggressively, so I'd maybe look towards silver. And you can trade that, by the way, on BTCC. If you want to join BTCC, there's a link in the description below. You're getting an amazing sign-up bonus, 10% deposit bonus for first-time depositors, up to $10,000 in sign-up deposits over there. And they're giving you 40% less on your trading fees if you use that particular link. So check it out in the description below. Now, we spoke yesterday about the Elliott wave count, right? Wave 1 into wave 2. So we're hunting for wave 2 bottom over here, and we're waiting for that big wave 3 push up, which is going to be the biggest, strongest move that we've seen. And then you go into that wave 4 final correction, and then wave 5 could be the cycle top. How high it goes into wave 5, we don't know. At the end of the day, we obviously want to capitalize on that wave 3 move. Now, I thought that this was a really, really good tweet over here. Let's just quickly pull that into view right now. Which basically outlines what you're looking at in terms of the moves. Now, wave 1 is impulsive. Wave 2 to 3 is impulsive. We're trying to catch that wave 2 to 3, and wave 4 to 5 is impulsive. But wave 1 to 2, so wave 2 over here, and wave 3 to 4 over here is corrective. And those actually last the longest periods of time. And that's what you need to watch out for, right? So impulsive versus corrective, ranges and trends. I teach this a lot in Wealth School as well. There is also a link below for any of you that haven't joined. Now, corrective waves are about 70% of the time you're spending in a corrective wave, which right now would be essentially in that corrective wave, wave 1 to 2, right? Well, 1 to 2 we've completed, 2 to 3, we're in this corrective phase right now. And therefore, that is the choppy period. Remember, markets range for about 70% of the time, pretty similar to what we've just shown over here. So you're spending 70% of the time in the corrective waves, and about 30% of the time, markets trend, aggressive upside moves. Now, you don't want to be offsides when the upside move happens, but you still want to protect your downside risk in case the whole market continues to draw down further and further and further, because at the end of the day, there are warning signs. The warning signs are these, right? A loss of momentum. We have 2 trend lines over here for the RSI on the weekly time frame for Bitcoin, and this is the more aggressive one, orange line moving towards the downside. You can see that rejection. I did highlight this on the 19th of May when price was coming into there and failing at that level. We still want to see a break of this level. Now, if you do move into that wave 3, you should see a break of this trend line. And then I would expect the wave 5 to come in with a major rejection and triple bearish divergence into this trend line over here. That would basically mark the end of the cycle. We haven't got there yet, but this is the choppy environment that's designed to shake you out of your positions, and you need to decide what's right for you, right? Do you want to be jumping in on the confirmation of the break, which would be reclaiming some key structural levels where the market breaks into a sign of strength again? Where would that be? In this instance, it would be a reclaim for the total cryptocurrency market cap above 3.3 trillion, which, if I just go into the daily time frame to just get a little bit more granular, it would be a reclaim, of course, of the 50% of the trading range, because the trading range over here is that choppy environment, right? We're looking at, again, wave 1 to wave 2. So wave 2 down into wave 3. This entire environment is basically the choppy environment, right? We're completing that wave 2 chop over here. And you can either wait for signs of strength, which would be a reclaim of that, or you can basically just buy at the bottom of the range and hope that it holds up. Now, you have to be mentally prepared that in this choppy, low volume environment, there is a chance that the total cryptocurrency market cap will sweep these lows, coming back down into the bid zone. If you do sweep those lows, shaking a lot of players out of their positions, you may create what's called a swing failure pattern. And usually that's the environment where you will start to rapidly appreciate into wave 3 following the shakeout. So be mentally prepared, right? You could experience further drawdown. And as long as you can plan for it, then you can succeed. Now, where does it all go completely wrong, where we can say that, you know what, this is not happening. We're not in an Elliott wave count with a wave 1 into a wave 2, looking for the wave 3. And in fact, it's failed and we're going much lower. Well, what you need to look out for is, of course, the previous high lows, because if it's a trading market, you would expect that these are the levels that need to hold 2.85 trillion. If you do start to break and close below 2.85 trillion, you may be going through massive distribution. And then bulls are caught with their pants down, with the bearish divergences playing out, and basically things may go much lower, right? And this is why you need to decide what's right for you. Do you want to be holding a portfolio, or do you want to just be actively trading for the last phase of the bull market? I've made clear what I'm doing in the markets and what I'm looking for, right? At the end of the day, understand this, understand that, we've been in a bull market for about 3 years, despite what it may feel like. I know most of you actually know that because you've been here since the beginning, but the bull market started over here. We've run up for about 3 years, and we are looking for possibly just one more move towards the upside, which would capture price finding major resistance around this $125,000 to $130,000 region. So this has been the line in the sand, is the yellow line, 106,145. Price is still failing there, captured below. And I said to you in the beginning of the show that I would identify and show to you the trading range. Well, this is clearly the trading range on Bitcoin, as opposed to what I showed you now on Total 1. and price is basically capped in this trading range. So I showed you on the total cryptocurrency market cap, if you do drop back down into the bid zone, you want to defend this $2.85 trillion mark, which was your previous major high low, which means you want to look out for potential swing failure pattern towards the downside, sweep all of those players out, recapture the trading range. What would that look like for Bitcoin? That could mean that in the short term, Bitcoin could do something very, very similar. And if Bitcoin did do something similar, it would look like this, right? You would see Bitcoin moving all the way down, taking out that low, sweeping below $100,000. There is major support in the form of a high volume area over there, which would act as support. And then if you recapture the trading range, that would be the shakeout, right? That would be the shakeout. And then you could possibly mark up into wave 3. So similar to the total crypto levels that I gave you over here, where I said 2.85 trillion, what would the equivalent look like for Bitcoin? Well, the equivalent for Bitcoin would be over here. Basically, you do not want to see price action trading below these levels, which is going to be $93,000. There is major support all the way down into $93,000. But if you drop and hold below $93,000, there is trouble over here, because then we have to treat this as a massive trading range, at which point you could trade all the way back down to the bottom of the trading range. And you could have the presence of a triple top over here, 1, 2, and 3, with low volume, which is supported what we identified as a potential risk, which we said we hope that doesn't happen, but it's a potential risk. That being the Wyckoff distribution schematic, whereby you basically go back on the previous videos, but I'm going to very quickly remind you. We said this is the upthrust after distribution, right? This is the upthrust over here. This is the upthrust after distribution. And basically, if you can't get back above on even lower volume, which is essentially what's happened right now, you couldn't get back above to that upthrust level, on even lower volume, then it validates the possibility. And again, I say possibility because trading is all about probabilities. We can never be 100% certain, and it is always a bit of an educated guess and gamble. So this validates that there is still a possibility that you're in a Wyckoff distribution schematic over here, which I know most people don't want to entertain because it's much easier to go with the up only, right? And the bullish bias is that, of course, the stock market breaks out over here and crypto just follows suit. And gold and silver continue to mark up, and Bitcoin is still trying to find its identity between whether it's a risk on asset or a commodity, right? We speak about the decoupling from the stock market. And is crypto decoupling and trading more like a commodity like gold, or is it still full on or risk off like the equity markets, right? That's what we're still waiting to discover. At the end of the day, you cannot deny it that volume is the lifeblood of the markets, and it's a vitally important thing to see for sustained momentum and rallies, which means if you have no volume, at the least you have to look for a move down into the bottom of the trading range over here, which I've just highlighted in yellow, which means potential sweep down with total cryptocurrency market cap could be a little bit more pain. Find support over here around $98,000 and bounce out of that region, right? That's something to watch for. And the line in the sand has been pretty simple. Any price action that can hold above 106,000, above this yellow line and the previous highs, is generally good, and you have more reason to go long over there. Anything below that yellow line, you have to treat with a bit of caution. And when we look at the trading range with the high and the low, you can see that level lines up exactly in the mid-range level, right? So you're exactly in the mid-range right now, or just below the mid-range at least. Volume declining, not a good thing, right? Not a good thing for the market. You're getting compression now between the 9 and 18 exponential moving average, with price caught between the 50 and that 9 and 18 exponential, which is now crossing towards the downside. I find this to be a very, very, very useful tool to use when price is caught at a range high, which it is, right? Here you have price caught at a range high, which means, according to my analysis, as long as price is below the 9 and 18 exponential, regardless of what the 50 is doing, which is the red one over here, as long as price is below the range high, with the 9 and the 18 crossing bearishly towards the downside, which it is doing, I have to treat this with extreme caution and open up the possibility that you could distribute lower, right? So you need to be really careful. Basically, you need to be careful. Is this a great time to buy? Basically, the answer is no, right? I would rather buy into strength where you've confirmed the bottom of that wave 2, meaning you go from wave 1 into wave 2, and you end wave 2 and you start wave 3. I'd rather buy on the confirmation, and the confirmation of that, if this is the bottom over here, because you may sweep lower, right? But if this is the bottom of that wave 2 and we've already started wave 3, you'll only get that confirmation if you can trade back above the trading, the range high, which would look something like that. Big breakout, throw back, hold it as support, print your third high low, and you basically have a strong buy signal at the third high low, which again, just lining that up with this chart is pretty much the equivalent of what I've said. Multiple closing candles above 106,164, which is the yellow line running across the screen. That is the significant level marked with high volume. Volume needs to kick in and come back into the market. And then you can say, you know what, maybe that was the bottom. Maybe that's the bottom of the wave 2, and we are ready to continue from wave 2 into wave 3. And that's the start of the wave 3 move, right? So a lot to look at, a lot of chop, a lot of confusion within the market, and a lot of hesitation. I think if they swept this low, a lot of people capitulate, get out of those positions, and then that's often when the next aggressive move does happen. So that's what we're looking at for Bitcoin. ETH will be pretty similar. If we look at Ethereum, let's just quickly go to it over here in terms of its key levels. Well, here's ETH, right? You're also starting to get that compression between the 50 and the 9 and 18 exponential moving average. And of course, this tells you a big move is coming. So if this does begin to break towards the downside and you lose that 50, you could definitely expand low, and that's what you need to be aware of and cautious of. But ETH trading in a pretty tight trading range. We'll review that in a bit. Volatility is still low, right? You can see the long to short ratio is pretty even over there. And in the last 24 hours, we only had 200 million worth of liquidations, most of them, again, on the long side over there. All right, if we look at the deltas, so useful when you're caught within a tight trading range. That's always the trick is, are you in a range or are you in a trend? And that's relative to the time frame that you're looking at as well. But if you are trading a tight trading range and that tight trading range continues to hold, for example, on a 4-hour time frame, you caught between a low and a high and you're trading near the bottom of that support level and you have negative deltas, which you currently do have, then yes, short term, that makes sense to still look for longs at the bottom of that trading range to at least trade towards the high, but don't confuse the various different time frames. All right. Liquidity is building more on Bitcoin towards the upside than it is on ETH. I'll show you what ETH looks like in a bit, but you have that liquidity around 106,000, still creating the possibility for a short squeeze. But again, the short squeeze is completely dependent on what the stock market does. You really need the stock market to trade into all-time highs. And then I think that it's inevitable that crypto will trade similar to equities and hasn't decoupled. It's not gold 2.0 yet. And therefore, you would expect Bitcoin to do the same thing and probably squeeze up. If you look at ETH, though, ETH is building up right now more liquidity on the downside, which shows that it may sweep those lows, right? We'll have a look at it. I love the comments over here. So tired of it. The market has not been nothing but exhausting. And absolutely, that's what it does. That is exactly what it does. And I definitely feel your pain. The market is choppy most of the time, which when people are looking for constant trending moves, you have to go back to this and understand that the market, it's just the way that it's designed. It spends 70% of the time in corrective moves, which we call ranges, and only 30% of the time in those impulsive moves, which is what we love to see, the wave 2 to 3 and the wave 4 to 5, which we also call trends, right? You have to be aware of that. So what smart money do is they identify the difference between the range and the trend, and they trade the range like a range. Those are two different trading styles and strategies. That's where you're looking for longs off the support levels and you're taking profit or even short selling the range high. Basically, yeah, the impulsive moves are very, very, very short-lived. Okay, so we've covered ETH over there as well. USDT, we want to see it gain acceptance under the massive SR flip region. This is still a big question mark. Is this an SR flip or is it going to deviate and reclaim? If it does, of course, that's not going to be looking good. But this is the order block that led to the breakdown on Thursday, the 8th of May. Oftentimes, price will retrace back to the scene of the crime, right? The area of interest where the breakdown occurred, you retrace back to there. You've already done it once. This is why you don't want to get back above there. If you do get back above it for the second time, probably it's going to deviate that whole level and then the market's going to drop. So I've been watching this pretty carefully. This is your symmetrical triangle in the USDT dominance. You are caught right at a major high. So you want to see follow through towards the downside very, very, very soon. But understand this, right? Understand that it's still a lot of chop. There is a lot of chop over there, and we're seeing a lot of coins suffering from that chop. One of the at least top positions has been Hype. One of the top coins that's done very, very well is Hype. And this is definitely looking very toppy to me on Hype. You have this massive trend line, very, very good chance that it breaks. If it does, major support will be found over here. So you can get a lot of clues as to what will happen next by looking at those various different altcoins. So we can go through some of the lists over here. We're going to have a look at some of the coins. How is Tron, one of the most hated coins, still ironically floating onwards and upwards, high highs and high lows on the daily time frame? It's definitely not looking too bad. Real world assets. Keep in mind, I've tried to keep the things that look better than the rest on my watch list over here, and I deleted everything that looks like garbage. So this is considering the cream of the crop, right? The best of the best. You have Ondo as a real world asset coming directly into key support. The pink zone is a major support area. You do have the yellow line, which is a key area of support. So we'll see if something can start to get moving from this point, and see some higher prices very soon with new volume coming into the market. Looking at BNB. So BNB still consolidating around those highs. Let's just see how the supporting trend line fits in. And I think if you just review a whole bunch of altcoins, it'll give you an idea of where the majority of the market lies, right? So I would say this is still choppy corrective. This could easily come all the way back down to that trend line, which is 575, which means you should expect that there's always a possibility of further drawdown, about another 10%. Okay, this one looks like it's going to distribute to me. This is BitGet's token, BGB. Because they incentivize projects to buy their token to list, you often see these exchange tokens doing very, very well. Binance looks like this because it's, of course, a powerhouse. They have a lot of power in the market as an organization and a place that has the most traders in the world. Therefore, their chart looks like this. BitGet maybe not as strong as an exchange, so therefore this looks like it could distribute. We'll see what happens over there. If you lose that 367 major support area, then it could go all the way back down to as low as 130. AI sector. Okay, still very, very choppy. Looking at the trading range, rejected off the mid-range on Tau. You got range quarterly coming in at 318, so still consolidating, still chopping about over here. Basically, you just want to assess. I wouldn't touch this until it at least comes down to about 318, and you want to see how that holds up. Okay, let's go to Render. Also, we spoke about this one, still chopping about. Big SR flip region. Expect you could get a couple of wicks falling through, something like that. But give it a bit of time, which means no point in really buying any of this until it drops at least below 290. At least below 290. Get Grass was in this triangle. I guess it's chosen its direction. That could be one indication as to where USDT dominance could go, right? If USDT dominance breaks through the top, everything else will break through the bottom. So the question is this already leading the move towards the downside? I don't know, right? At the end of the day, level to level, there's not that much price issue over here, but that's your next major area of support is going to be down into about 115. Okay, Fetch AI. This is, of course, 3 AI projects that have, done some sort of a joint venture and partnered, but still coming into key support over here. This is a major area of support. It could easily come all the way back down to 47 as the market distributes. Okay, meme coins. Okay, let's have a look. This one should be pretty interesting. Okay, meme coins still does have that falling wedge pattern, but remember, when you look at patterns, chart patterns, they're not all built equally, as I always tell the guys in Whale School. You have ascending and descending triangles, which I believe have the highest reliability and hit rate when it comes to chart patterns. And then you have bull and bear flags, which basically are just trend continuation patterns and are able to identify the trend. So you need to consider chart patterns and which ones are reliable and which ones are not. Falling wedges and rising wedges are not that reliable, and patterns can morph and change. But as it currently stands, this is a falling wedge, theoretically coming into key support over here. This is a big SR flip region. You can see previous resistance, resistance, coming back, flipped at a support, bounce price, came back, flipping at a support again on Pepe. And this is a higher beta play on ETH. So if ETH moves up and ETH breaks towards the upside, you would expect Pepe to do multiples on top of ETH. So this is a pretty key area. Your strong invalidation is pretty far away. Of course, you do not want to basically fully retrace that entire move. If you struggle to get back above these highs, to give you something a little bit more precise, I would say, if you can't soon in the next couple of days, because this is a daily time frame, if you can't in the next couple of days start to break back above last 4 digits, 1164. If you can't get back above that high that occurred, that was set on the 16th of June, that's going to be a very, very telling sign. Because if you can't get back above that high, and just use this same approach for any coin that you're looking at, if you can't break out of this falling wedge and flip that and basically confirm the major low over here soon in the next couple of days, and this instead turns into resistance, then you're not going to SR flip this region. Then you're probably going to, instead of flipping it into support, you're going to confirm this as resistance and that is a deviation. And then you're probably going to come back down for this low. And then there could be more pain in the market, revisiting all the way back down to these lows. Okay. So a lot of chop in the market. A lot's on the line because everybody is trying to figure out, is this wave 1 to 2 and basically confirming the 2 low about to lead into 3, or are we just simply chopping about? Which one is it? Okay, that's the tough question to ask. So we're looking for the inflection points. Now, you don't want to see this go much lower. If this is going to be, wave 1 to 2 about to begin the wave 3 bounce, which is one of the most aggressive moves, you basically want this to happen right over here. You can always use things like fibs as additional confluence. Let's just quickly line that up with this fib based on the origin of the move. Anything below the 50% level, so we go from the start of the move to the height of the move, anything below that 50% level is generally considered weakness. And this is what I'm talking about, where I say you can rather wait for signs of strength to come into play, which I said was on total reclaiming 3.3 trillion. Let's go back to Pepe over here. That means you need to get back above, which would confirm not only a break above the level that I just told you, which was the Friday high over there, 1164, but simultaneously that should get you back above the 50% level. And on top of that, breaking out of the downsloping trend line, which therefore that becomes the best area to say, okay, you know what, the low is in fact in over there. And now we're looking for massive rapid expansion. Okay, cool. The Swiss bank will cut rates in 14 minutes. Great news. Well done. Well done to the Swiss. Cool, guys. Yeah, I mean, look, that doesn't really affect us too much. All the other banks are, all the other nations are cutting rates pretty aggressively. But the truth is that the US market drives the most liquidity, and whatever their market is doing, which they don't really have any reason to cut. Stock market's nearly at all-time highs. Inflation is somewhat coming back. So, they don't need to. We need them to cut to make altcoins run. If you're on the wrong side of the trade, that is. Okay, cool. Just checking out the comment section over there. Let's see what else have we got in the comments over here. Anything interesting that you want to have a look at? Any other interesting remarks or comments? Okay, cut the rate to open the gates. Yes, maybe we should make that the title one day. That's a nice title for the show. Cut the rate, open the gate, crypto pumps now. Click here to find out what happens next. Okay, cool, guys. In terms of the Monday ranges, right? Again, it's just choppy. So as much as the Monday range strategy suggests that as soon as you reclaim the Monday low, it's basically a long. You're looking for a long. You have to use context. And the context would be what is going on with the volume. And unfortunately, there's just no volume right now. So basically what I would say regarding this is that yes, there's a possibility of a short squeeze purely based on what the stock market is doing, which is going to be closed today. But if the stock market trades to new highs, that increases the chances of a short squeeze purely based on crypto following equities. But the context is that when we isolate crypto as a whole and we just look at the chart that's in front of us, the volume is very, very low. There's no interest in the market. And the only thing that's moving is Bitcoin due to the institutional interest, which means that you have to be very, very, very careful trading altcoins, which means that I think your best bet is to rather wait for volume to come back into the market and for altcoins to reclaim their 50% level. So any altcoin that you look at, just look at where the most recent low was. There's the low, mark out the high, mark out the 50% level, so the mid-range, and then anything that's in a falling wedge, theoretically, by reclaiming that 50% level, simultaneously, you would need to see volume for that to happen, and you'd break back into a stronger area of strength. And then you have a lot of upside and you have an invalidation, which that becomes the invalidation. So it's buy here, invalidation over here, and then you can start to trade higher prices. TP1 becomes here, and then you can start to trade higher up, right? That's what we're looking at. Waning moon currently. I don't know if you mean warning moon, weaning moon, but speaking of the moon, this bull moon hasn't really amounted to much, and that's also a bit of a warning sign. When the moon phases, and for anyone new here, I must think that I'm smoking crack, but let's just quickly go to that again. This has been very, very reliable, right? Historically, bull moon, pump, bear moon, consolidation or dump, bull moon, pump, bear moon, dump, right? You can see over here, this is the first bear moon that actually amounted into a significant dip recently. So bull moon, nothing. If this just leads to consolidation, that means that the next bear moon, if prices still cap below the range highs, is a bit of a warning sign that that one could probably lead to a pretty big dump. So we found that the bear moon and bull moon works pretty well. And we have already completed about 10 days, which means the bulls are running out of time, in alignment with what we're seeing in the volume, right? We like to contextualize things and add in other confluent factors, and it's telling us that the bulls are just not doing much over here. Like, they have 5 days to go to validate that this bull moon actually worked out and break things into new highs. And if they can't do that, then yes, we have to start to shift the bias and look for maybe a deeper correction. But it's very choppy, very choppy in the market at the moment, which doesn't make for great trend trading, but it makes for great range trading. If you want to do well in the range trading, jump into whale room. Whale room is where it's at, right? This is where we do all the different styles of trading the low time frames, scalping the market. We have scalp traders in here as well. Use the link in the description below if you do want to join. Okay. All right, guys, what else? What else have we got? So I think the opportunities, to summarize, wait to reclaim the 50% levels on altcoins, mark from the low to the high. Reclaiming that 50% level probably occurs with new volume coming into the market. Maybe then you can say that the major low is in and the corrective phase is over. And if the Elliott wave is still valid, we would have already at that point started wave 3, which means you have the longest, strongest, biggest upside moves available. But no need to, gamble. Right now, it's a bit of a gamble. So that's one thing. The other thing is silver and gold provide a lot of trending opportunities in these environments. So if you want to trade silver and gold, there is a link over here. Go to BTCC, click that over there, sign up. You get a sign-up deposit bonus and 40% reduction on your trading fees by using that link. What else? Whale room. If you want the low time frame trades, everything is over there for you in whale room. All right. I think let's see how the market plays out. It is Juneteenth, so happy Juneteenth to the Americans. The rest of you, I'll catch you on tomorrow's show. I hope you have a lovely, lovely day, and we'll see you soon. Cheers for now.